right. Hi, everyone. Welcome to this special event with Norman Hallett. He is back today. He had a great presentation a couple of days ago, so I wanted him to come back and share even more of his knowledge with you. So my name is David Kosmeter. I'm the creator of TimingResearch.com. And of course, this presentation is for educational purposes only. Trading is not suitable for all people. So please consult a financial advisor and only trade with money you can afford to lose. And as usual, this recording is being, or this presentation, I keep saying that, this presentation is being recorded and will be available on TimingResearch.com. And if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you'll be able to find it there as well. So back with us today is Norman Hallett.
And thank you very much. Yes, this presentation is being recorded and the recording will be presented again.
Yeah, exactly.
So you're right. No mistakes. I'm going to try to share my screen here if I can, and we'll.
Sorry, yeah, I forgot that part. Yeah, you should be able to record now, or should be able to share now.
There you go again. Who was
Yeah.
that said that? Was that Bush? I think Bush won. There you go again.
All right, now I see your screen.
Okay. All right. Shall I take over for the moment?
Yeah, go for it.
Here I go. Listen, thank you everybody for coming here on a Saturday. The great news is that this presentation, if it takes 30 minutes, I'm going to be surprised. However, I'm going to make 4 points here that if you're a prop trader, in fact, if you're any kind of trader, these will apply, but especially for prop traders, because prop traders have more stringent rules than if you're trading your own money. But not needless to say, I'll just say it, that those stringent rules are not to be spit at. They're to make you a more professional in your trading. In fact, the basic challenge with prop trading is that they count open trade equity against you. Many of the firms, especially the bigger ones like Apex, Top Step, and so on. You're going to be when you have an open trade equity, an open position, and you have a 1 or 2% profit. If you're trading a $50,000 account and you're up $1,000 in your open position, and you let it go to break even. If you're trading your own money, that's fine. You say to yourself, I should have taken it. I was an idiot. I should have taken it, but I still have the money I started with, 50,000. Well, in prop trading, you are an idiot. They hold it against you because so that $1,000 that you didn't take is counted against what they call your red line. And I think you know what that red line is in a $50,000 account. It's only $2,500 in give this. That's a 5% floor they give you, and you just can't be letting go of open trade equity. But in the professional trading world, that's one thing that we know right from the beginning. When you have open trade equity, you can't let it go. So there's a number of things that happen, things that you can do to keep the odds on your side in prop trading. And I'm going to go through my favorite 4 right here. And I don't think you've heard at least 2 of them, maybe even 3 of them, because I come from a place that most don't come from. Not only, well, I've written books on trading plans, so I know the technical part, but I also have an equal respect, almost a greater respect for the mental and emotional aspects of trading. So I always include that in my processes and try to actually include it in the rules of the trading plan. And I'm going to show you 4 rules today that are in that arena. So let's get going. I've got a chat. Let's see, we're going to chat here. Just hi from UK. All right. I'm about midway. I'll just check that you're still with me. Otherwise, we'll get going here, like right now. The red line, because of the tight loss parameters that prop trading requires, there's a few techniques that you can employ that are going to limit your concern about the red line, that bust line, that when you get close to that $2,500 drawdown. And but because when that happens, you don't have to actually reach the drawdown to start feeling a little um, anxious. And in fact, it's when you get too close to it, when you get $500 away from it or $700 away from it, you either start to get a little bit too aggressive or you start to get too careful. And there are ways of being careful, which I do promote in funded accounts, not necessarily the evaluation stage, but in the funded phase, where if you hit the red line, you got to start again in the evaluation stage. So a little bit of technique different when you're in the evaluation and funded stage. But needless to say, that red line is in the back of your mind all the time. And therefore, you need to recognize that about yourself, because most traders are not successful, not because they don't have a trading plan enough to make them some money, maybe not as much as, say, a loaded gun trading plan, which is in that mid 60 area of profitability. But even a 52% trading plan or 55% winning trades are going to make you money over the long term. But it's the mental and emotional part that's infused in that really creates the problems. And if you take heed of that early, you can maybe you won't suffer as much as most of us have suffered by not having taken it early. But the idea here is that you can do two things. You can work on your mind, which we're one of the best at in our firm, but I'm not going to cover that today. Or you can build a trading plan that recognizes some of the things that get in your way when you're trading, like lack of patience, fear of losing, these kinds of things. This is built into our trading plan, Loaded Gun, and I want to show you. Um, oh, incidentally, I'm not selling you anything today, so stick around at the end. If you, there is a PDF I'd like you to download and take a look at if you'd like. But I'm going to give you something that I know you've never heard. A thing um, that professional traders, a floor trader showed this to me at one time, and it rings. It's been ringing very true, especially uh, lately. And it's just amazing what you hear about what is the truth and what is the actual truth. And I'm going to show you an expression that I know you've heard that's untrue, that I believe is untrue, and I look for trades within that untruth, if you know what I mean. Okay, here's I went to the University of Cincinnati. That's where I met uh, Carol Stoller. We almost married her. From her father was a dentist. I thought that'd be good for me. I went to the University of Cincinnati because when you don't really have the money to go to college, this was a work-study college. If your grades are good enough, and they were good in high school, I was able to qualify for the University of Cincinnati as an engineer. But my problem, it was a work study, go to school a quarter, work a quarter. The problem was that I wasn't a very good student there. I was a top 10 student in high school, but I had a photographic memory. I lost that in college for some reason. And I was kind of a C plus, B minus, B minus C plus student in high school or in college. Anyway, I did get out with a math degree because I really love the numbers of it, and that serves me well here. During that time, I also worked at nights at the Prime and Wine Restaurant. If you're from Cincinnati, I know you know where that is in Kenwood. But I realized that that really wasn't the money was in booze and not in in the restaurant in the food. So I was hired by American Events Corporation to train the employees and at one of the highest end discos in the country called Park Avenue. We were supposed to be this was our, now I'm in the late 70s. So I've been around, and but you can't stay in we were the main competition, but I never really reached that to Studio 54, but I did open them in Milwaukee and in Dallas and a couple of other places. But you can't stay in that business too long because you lose your mind. So I said, what can I do with my math degree? And I started as an option trader on the phone. And within about 18 months, I was running a room that looked exactly like this. Well, very, very close to it. Individual traders who were responsible for trading clients' money. And when they didn't do a good job, the guys at the bottom of the totem pole, you notice there's no women in this photo. We had two women out of 63. One was at the very top, one was at the very bottom of the tote board. But when you're at the bottom, you have to come into my office. Why aren't you performing for your clients? And the majority of, and when I say majority, I mean 80% of the issues was a trading plan that was too complicated, that took too many hoops to get in. By the time you got confirmation, the move was half over. So listen, everybody wants to buy the top and the bottom. You can never do that. You don't want to do that. But when you have signals against a double bottom or a short signal against the double top, you got a pretty good chance of being right. So support and resistance, you learn, is important. But the most important thing is keeping the trading plan simple. Okay, so I'm going to show you a little bit about that in a second. But I was hired by Payne Weber after I became a big shot in San Mateo, California. Went up to the city on California Street, and then actually moved to Florida, where I was hired by Payne Weber, and as a commodity trading advisor, I managed money, and I received 20% of the money that I managed, which was great during the good times, and when you had a couple of sideways or down months, you earned nothing. So it was good because I was more profitable than unprofitable even at that time. But it's a tough way to go. I didn't want to sell. And part of the job was selling. Wasn't interested in selling. Anyway, I started the Disciplined Trader in 2000, and because of my love for the mental and emotional part, I knew the math and I knew that, but nobody was doing the discipline part, and so I focused my business on that. Still, half of my business with my wife, who is a well-known subconscious trainer, a world well-known kind of subconscious trainer. She and I handle the mental part for traders, and then I handle the trading plan, trading room, that kind of part for traders. So the combination is something you really don't get anywhere else. But my latest my latest love is this prop trading. Who thought of this? It's been around for a while, but I didn't even realize it. About 3 years ago, I decided, maybe 4, to focus my business on helping traders in prop trading. Because although you believe it's going to be easier and less stressful by trading somebody else's money, it's kind of true, but it's really not true. There are other elements of prop trading, like the red line, that add to your anxiety, and therefore that anxiety situation in total still exists, if you understand what I'm saying. Okay, let's get to the points here. Well, I've written several books. I've written a lot of industry papers. I love to write, and I keep writing. So if you're in the industry, you've probably read most of my stuff. Anyway, listen, don't pray. Instead, you want to put the odds on your side in prop trading. The more, and here's an expression that's very important: the more you ask from a market, the less it's likely to happen. The less you ask from a market, the more it's likely to happen. Logical, right? So therefore, it makes sense to include the element of scalping in your trading plan when you prop trade. And why is it important, prop trading? Look, I mean, if you take a short profit and the position would have rocketed to an unbelievable profit, and you got out early, you start kicking yourself and you think. So I like to do both. In my trading plan, I do both in our Disciplined Trader, in our loaded gun trading plan. But you need the element of scalping in prop trading, I believe. Why? Because when you take a short profit, that adds to your equity and improves your distance from the red line. Again, prop traders are assessed or paying too much attention to the red line. I believe that when you can't remember a word, that you should take an alternate definition. That's also important. Anyway, the element of scalping is important in your trading plan. I believe, in fact, that at least 50% of your approach with prop trading should be scalping. And when I say that, is if you apply 2 contracts when you initiate a trade, one should be a scalp, and the other one what I call a runner. Okay, if you take 3 contracts when you initiate a trade, 2 should be scalps. If you take 5, 3 should be scalps. So you're always favoring, in an odd number of contracts, the the scalp. Why? Because it does two things. Not only does it build equity in your account toward your goal of getting funded or getting paid if you're in the funded stage, but it continues to pad that distance between the red line, keep the mind out of it, and the less you ask from a market, the more it's likely to happen. But I've never been a scalper, even in my early days. In fact, I would say that of that room of 63 people, there may have been two scalpers there, and they were never at the top of the board. But I do think that in prop trading, you need to scalp. Okay. Uh, it's all about padding your distance from the red line so that you trade comfortably and stay on your plan and adding positive balances to your account at the same time. Let me give you some examples of some futures contracts to consider. Okay, for this effort, and to put on at least two contracts, take one as a scalp and let the other one ride. Okay, I've been doing this for a while, and you saw the payouts I've been having and so on. So I want to show you some of the contracts. The micro NQ and the micro ES, the Nasdaq and the S&P, very flexible in your exposure, but can add up a bit with round turns fees, but can add up. In other words, the more small contract, each contract you take, whether it's a 1/10 contract or a full contract, say the micro NQ is a 1/10 of the normal contract that you take. In the ES contract, okay, or the NQ contract is of a certain size. The micro is 1/10. If you take 10 micros instead of one NQ, you're going to be paying 10 round turn commissions instead of one. Okay, the round turn is about the same on all these contracts. So, even though I don't want you to trip over the pennies to get to the dollars, it can add up if you just keep on taking. If you're taking 8 or 9 NQs, think about taking the full contract because you're there. You're kind of there anyway. And if you only take one contract, okay, and to reach your risk parameter, if you can't take more than one contract to satisfy your risk parameter, which is the most important thing when you take a trade. I'm only willing to risk X amount of dollars and put your stop in. If you do that, then if one contract, two contracts are too much of a risk to where you properly put in your stop, then take one contract. And if you take one contract, it's a scalp. Okay, that's how heavy you favor the contract. So what I'm saying is the micro NQ and ES. I think everybody knows that because most traders are trading the indexes, and so they know about the micro ES and NQ. Here's maybe something that you haven't considered: the full contract of the euro, which is the 6E, and the Japanese yen, which is the 6J, and I'm talking in Ninja Trader language. But the full contract of euro and Japanese yen, it easily fits into the idea of taking at least two contracts. 100 points is only $125, whether you're in the Japanese yen or the euro dollar. And so, for instance, in the $50,000 account, which I suggest the traders start with, I never like to. I don't. I teach $250 is the maximum risk you want to take on any one approach. So if I'm approaching a trade in the euro, I'm going and I want to take two contracts. Each one can't be more than 100 points of risk. Okay, so the two contracts would add to 250. That would be great to take. It's within my parameter, and I get really got a nice. I've got a really nice contract. So, in fact, different bases give you different exposures. Why I say that is that if you've had a couple of losing trades in a row, let's say, and you're looking for a winning trade, I like to look to the Japanese yen. It has the same personality, really, as the euro dollar from the standpoint of they tend to trend. If you're right about a trade, you can often get that runner part to really go for you. If you look at at currency charts, you'll see that they tend to trend. Okay, and so the fact that the Japanese yen has a basis of about 6.65 and the euro dollar is 1.10, let's say, that's almost twice the size. And so a 1% move in the euro dollar is twice the action as the Japanese yen. So I like to when I get into a little bit of trouble in a day, I have a couple of losses, and I say, hey, want to turn this around? Go to the Japanese yen and take on two contracts, and I think you're going to see that's um, a pretty good thing to do. Okay, as long as you have a pretty good trading plan. In fact, I used to have $50,000 qualifying people only trade these contracts or suggest that they do because they can be so consistent. So I give you that. And did I mention? Well, did I mention the currencies had a trend? I did. Here's a contract, probably my favorite. Um, as an alternate contract to these, and that's the mini crude oil. It's a half contract of crude oil. Now, crude oil can be a big contract, but if you take a half contract, you can sometimes fit two half contracts into that $250 risk. Um, in many cases, you can apply and get a nice quick scalp and still have half left to run because crude tends to run. In fact, not only does crude tend to take off, but it tends to take off quickly. So if you have a trading plan that understands that when you get some sideways movement, you're going to break out one way or the other, and but where do you go with that? You have to wait for the breakout. Are there signals right before that to get into the bottom of a northerly range and then and take that northerly move? In any event, the because it tends to pop. Not only when it breaks, it tends to move quickly. So not only do you get your scalp on one half of that contract, but you also get a nice rudder out of it. I really like this contract, but it's got to be in the right place. You've got to have, and you've got to keep your risk to 250, which is only 12 cents, 12 and a half cents in the QM because you're taking two of them, okay, which would be 25 points and $250. So I give you these because, they work. They work for prop trading because of the scalping increase in scalp. I think if I only traded these contracts, I think that the overall testing would be really closer to that 72% rather than 65 or 66. Okay, so what is the second thing I want to talk about is a frequent, reliable trigger. Let me just suggest that you're with me now. I'm going to just suggest a track. Let me just give me a couple of chats and say, hey, I'm with you. Let's keep going. Um, Stop with the flurry and just give me a couple of, give me an idea that you're here while I drink here. All right, Louis, a brave man. Luis, okay. I had a waiter the other day named Louis, and I sang him the whole Louis, Louis. All right, Terry, and hey, okay, thank you, thank you. Let's keep going. A frequent, reliable trigger. And remember, stay until the end because I got something for you that you're not going to. Maybe this is going to take more than a half hour. Maybe it'll be more like 45 minutes. You need a frequent and reliable trigger. Since a lot of my traders are older gentlemen, I thought that would really, the first frequent gift there would hit home with you there. And reliable. AJ Brown. I think David knows AJ. I know you know AJ. He's a trapeze artist. One of our fellow traders is a trapeze artist. If the trigger that you have to get you into a trade needs to be frequent and reliable. And by frequent, I mean don't want to test your patience. That's why frequent is important. If you have a short period of time to trade, you need to have triggers. Otherwise, you'll be tempted to take lesser triggers. In other words, lesser trades. It's got to be a frequent trigger. If it's not coming up, you're going to test your issue with the lack of patience. Okay. And a pro tip is if you want more triggers, shorten your time frame. The shorter time frame you have, the shorter time frame you should probably be trading. But if you're trading 5 minute charts, 5 minute candle charts or 10-minute candle charts, move to the two. A lot of my traders have success with our loaded gun trading the 1 minute time frame. I'm not a big proponent. It moves too fast for me, and that moves too fast for most traders. But if you're somebody that's drinks 10 cups of coffee before you start, maybe one is good, but two is really a nice place with futures contracts. If you're a person that likes a lot of triggers, okay. And the frequent part, the reliable part is important too. You need to have the reliability tested. to give you a pop so that you can take your scalp more often. So if not only should you have a trigger that's reliable, but it should give you a pop, and you should be able to test that. But and you want to move your stop to break even on the remaining. So take your pop, take that short, and we have a measure for that in our system. When you take your scalp, go ahead and move your stop to break even on the second position that you have, so that you can maintain that equity again. And another pro tip is test in real time. It may take you, it may take weeks, but you can't just look at a chart and say that would have worked, because when you see a bar, you never know where it happened, say in that 5-minute candle period. For instance, in this quick chart here, let's say one of our triggers would have been right here, okay? And we would have wanted to take our scalp right in this area right here. Maybe, I'm not measuring, I don't have the measurements here because I don't have the numbers, but it's easy. And so we've been looking to take the scalp, and then here, if you're back testing, if you're looking at this in a back test, you don't know what happened here. You know that the market opened here, okay? But you don't know if it went down and took your scalp first and then came up and then came back down to the bottom, or it started here, came wide up and stopped you out because the stop would be here, uh, and came down. So when you see something like this, there's no way of telling what happened during that period of time unless you go to a smaller time chart. So, most traders who are back testing like this are counting this as a win. I don't know if it was. So when you test, and I've done the testing for you in our system, but if you're going to test on your own, make sure you're doing it in real time. Now, some of these, in fact, even when you can roll back time and pop and most trading platforms have the ability to extend, to show you what looks like the present and then expose the next few bars. Still not going to do it. You got to see what happens in between. Okay, just a kind of a pro tip for you, so you really never know. I think I use those arrows in my explanation. All right, let's move a little faster because I promised a half hour, already past that. I didn't promise it. I mentioned it probably would happen. So let's, these are quick. Limit the time you spend trading. Okay, you're not going to hear that a lot. A lot of traders who are, especially retired traders, I can trade all day. Not a good idea. Okay, the less time you have to trade, the more focused you'll be. And focused is on my Mount Rushmore keys to profitable trading. You got to be focused. I'm doing something now called focus blocks. If you're interested in what that is, where we take a bunch of people on the screen, and when I trade, I sometimes I'll do it in a focus block, which means I can't do anything else. It's a kind of a group that we have. That anyway, if you're interested in that, let me know. Just email me, and I'll show you my email in a second. But the less time you have to trade, the more focused you'll be. And if you cannot focus, that's when you miss trade. That's when you chase trades. Again, I think you're seeing here how I infuse some of the mental and emotional capabilities that you have, but may not be exercising in the way you trade. Okay, I've seldom seen consistent success for retail traders who trade all day. Professional traders don't trade all day. They used to take a lunch at least, right? 90 minutes to 4 hours seems to be the sweet range. Okay, to stay focused and so on, depending on how your ability is to maintain your focus once you trade. If you insist on trading all day, you want to take breaks, have a mental strengthening program so that you can recharge your focus. We have not testimonials, but we have what am I trying to say? Recordings, meditations. We have 5-minute meditations that you can take to kind of recharge. So we have that in our mental programs. But I'm just saying, if you got to find a way to take a break, could be just go out and walk the dog and come back. Okay. So extreme time limitations, you want to go to the 2-minute chart. I had a trader about a year ago that can only trade for 90 minutes. And then it was 60 minutes he could trade before he went to work. He was a sales manager. And so, most of my examples are on a 5-minute chart, although they work on any trade, any size candle chart. But when he moved to a 60-minute, he became a better trader than 90 minutes. 30 minutes made a difference and he went to the 2-minute chart because it You got to focus. I only have this time. I got to do it right. I think you get my point. This is a big tip. So don't put it in your back pocket, front pocket. And don't trade 10 minutes before a report or after a report. You've heard this before, but you hear people say they've got a way to take advantage of that. Never seen one that's consistent. Okay, there are a few professionals who I've seen ever have a consistent success trading reports. Successful prop trader, it's all about being consistent and putting yourself in the right place, putting the odds on your side. Why would you apply a trade in an environment that often results in whipsaw? Okay, I like to wait, incidentally, about 10 or 15 minutes, 3 or 4 bars, and a 5-minute bar to see. When it whipsaws, it'll usually then decide on a direction, and if you can get then a signal in that direction as defined by the candles after the report, then that can be some of the better times to take. So I love trading on report days. Most traders know why. That's when you get movement, but you don't want to do it right at the report. So more on that some other time. Okay, greed made me do it. I wanted the opportunity for a big quick hit. You don't want to be honoring that little thought. It's really not worth it. Okay, so in summary, let's wrap this all up. In summary, to put the odds on your side, you want to have at least 50% of your entries as scalp intended trades. Okay, and I've told you all the reasons. Again, that red line. You want to employ a frequent, reliable trigger. And then it's not just for older gentlemen trading, it's for everybody. Okay, employ a frequent, reliable trigger. You want to limit the time you spend trading so you keep your focus, and you don't want to trade against reports. These 4 things can really, really help you, especially, of course, the top 2. But if you spend too much time, you're going to get strung out. And it only takes is one bonehead move, and I can say that because I've done them in my past, my early days, and take away everything. Usually, that's the way of the inconsistent trader. Win, 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 win. Big loss. Win, 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 win. Don't do it. Okay, limit the time you trade. Focus on what you're doing. Limit each trade to a specific amount. Why do I limit when I'm trading a $50,000 prop account? Why do I limit it to $250? Because when you start a $50,000 account, you've got a $2,500 floor. If I divide that by 10, it's 250. I want 10 shots. Okay, you're not, I've never had 10 losers in a row, and you probably haven't either, but I've had 4 or 5, even in a good, sometimes it just happens. Every year you're going to get a situation 1 or 2 times where you get, even with the greatest trading plan. So I want chances. Okay. I want to be in it. I don't want to just, I want to stay in the trade. So if I limit each trade to $250, I get 10 shots. When I meet a trader who's down to the $1,500 before I say divide that by 10. So you can only take, say, $175 per trade. You want to give yourself enough room. Now, when you get funded and when you're successful at funding, once you've built that $50,000 to 60 or 70, that bottom line doesn't move. That $2,500 line doesn't move and follow you. You've got a lot of room. We can do a lot of other things. That's where I'm really fun to coach you. Anyway, and don't trade against reports. All right, here's this. I just wanted to show you simplicity. I mentioned how important it is. This is a chart we trade from. Okay, it's got a couple of moving averages. In fact, the basic system only has one, and you can see that it's frequent and reliable. Each one of these trades. Now, I didn't really cherry pick this, but it did. It is one. Listen, we have losses. But there are none here in this particular point in time in this S&P chart. Okay, so just want to show you how simple it can be. That's an RSI on the bottom we use, and we don't use it to get into a trade or not get into a trade. We use it for position sizing. Okay, so here's my this is some of the certificates they give you when you qualify and when you get paid. I don't think you've seen all of that. I want to talk about. I just wanted to. This is the final. 60 seconds or 120 seconds. Then I want to show you the extra thing that I got for you. But I'm running a book called I'm in the final edit stage. Their Money, Your Profit, cashing in on the prop trading revolution. Okay. For release, I guess I was leasing one of my apartments. I'm not sure. But it was for lease in the first quarter of 2024 for release. in there. So I'm doing my final, and I need some. I want to collect 100. Uh, I've reduced that. It's kind of crazy, but I want at least 75 before this. They're coming in, but you dream of a particular pace. But I want your case study. Okay, loaded gun simple trading plan. I want you to have the loaded gun. I want you to be part of the loaded gun simple trading plan case study group, and that includes the trading plan and one-on-one coaching with me for 90 days plus group coaching that we have every month. Okay, the trading plan plus all the coaching. Okay, we've got a couple of trading rooms. We've got one for beginners and one for more experience. It runs 5 days a week. 3 of those days are for beginner and moderate. 2 are for experience. I think you'll enjoy that if you're into trading rooms. Evaluation, and the purpose of this of the group is to get you get you through the evaluation to the funded stage, and then money wired into your account. Then that's when I want your testimonial. Okay, I want your testimonial to put in the book if it comes early enough. It may not be early enough for that now. The ones that I've done, we've been offering this for about 4 weeks, and I've chosen those pretty much already. But I want to use it in my advertising for the book. So for the promotion of the book, I just need case study. And for that, I want to give you this. I've created this case study group, which I think you're really going to like. If you want the PDF on this, okay, all you got to do is write me at admin@thedisciplinetrader.com. Okay, and I'll be doing it today because everybody's off today. If I see this request come in where you just tell me, hey, I'm interested in the case study group, I will send you the PDF that explains all of the parameters of the case study group. What I expect from you, which is primarily your testimonial for my and a video. Really, I really would like your video. And if you don't do videos, it could be I'll find a what do they call it, an avatar. But I'd really like a video for you. Those are the most effective in promoting the book. But and it doesn't have to be. You can do written if you want. But I'm really hoping you do the. I want a testimonial that I can put in the book. Okay, for the use of the loaded gun simple trading plan and the greatness of what prop trading can be. Okay, so again, admin@thedisciplinetrader.com. And just say that I'm interested in the case study group. I will send you the PDF. Okay. So here's my extras. We're over in the presentation proper, but I wanted to show you this. You're not going to hear this anywhere else. Okay. What you're looking at here. Sorry for this arrow. Here's the expression that you hear around that is not necessarily true, in my opinion. That don't trade at lunchtime. Don't trade between 12 and 1 for the New York session because everybody's at lunch, the volume is low, and you can get chopped up. Here's what I found from somebody told me this 2 decades ago, and I always have it in the back of my mind. I'm showing it to you. Yes, there is a difference between the 12 and 1 period of time, but it's usually the effect on the market is usually, I'll just call it a sagging in the market. Now, sometimes you get more than the sag, sometimes it's sideways, but a sag. So if you can get a short signal within the 12 to 1 time frame, usually in the first half hour, if you can get that short signal, I take it, okay, because of the tendency of the markets to sag during that. So here, this is all from last week. It wasn't yesterday, but the other first 4 days of the week. I just clipped them off in the chart. Here's 12 o'clock. Okay, and you can do this. Look at it yourself. 12 to 1. That's pretty nice sag, right? We would have had this trade incidentally. This is another one. I mixed up the days. I was fitting the charts in, so I don't. This is not necessarily Monday, Tuesday, Wednesday, but they're from the first 4 days of this week. Here's 12 to 1. Okay, this is more of a sag. Okay, and here's another one. This is 12 o'clock here. You can see this is a nice little run, and we would have had this trade in here. And this one here is 12 to 1. And you can see where it also sagged. Now this was maybe it's a special week. Actually, I think Friday, I didn't post it and I didn't trade on Friday, but I did take a glance. I think it was there wasn't a sag. There was actually an up move or a sideways move. But these 4 days, more than not, is what I'm saying. Don't don't be afraid to trade this in the right way. I mean, you're always looking for your signals, you're always looking for your supports, resistances, the basic stuff. But if you're going to trade this, and I do like to trade it, it usually sags. So I favor, again, I think it's a way of putting the odds in your favor. Okay, again, here is the offer, Loaded Gun Simple Trading Plan Case Study Group. I want you to be in the case study group where you're going to get the plan, you're going to get one-on-one coaching from me for 90 days. And that 90 days, incidentally, starts with our first meeting. Listen, you're not committing to anything. It's all explained. And all you're getting is the PDF. I want to send you the PDF. You can read all about it. Like the little newspaper boy used to say when he threw the newspaper on your lawn. Uh, read all about it at the PDF. So if you want the PDF, just email me at admin@thedisciplined and say, I want the PDF, or I'm interested in this case study. Trading plan, you'll get the trading plan, and you'll get one-on-one coaching, and it'll all be explained what that all means. You'll get, we have a couple of trading rooms, beginner and moderate and experienced. This is not mentioned in the PDF, I don't think. I didn't put it in there because it's something that we were doing as a beta, but now it's real. So I didn't want to say it was there when it wasn't. But it's there now, but you won't read the PDF. And again, the purpose is to get you evaluated correctly to get funded. And then your funding leads to, you can reach the funded phase, but what good is it if you blow out? You want that money wired into your account, and that's really what I want. And then I want your testimonial. That's your end of it. Okay. Admin at All right. If there's any questions, I'll take them now. Otherwise, I'll be on. Well, I won't be anywhere. I won't be on the site. But so you got to ask them now, or request the PDF, and you can get your questions answered. Very similar move around 9:15, leading to the open. Typically counter an initial open move. Also trade the sag. Another sag. Howard Taylor. Hi, Howard. Good to see you. That's my email address. This does work. Yes. Okay, Stuart. I'm getting some confirmation that it does work. Way to go. Okay, Stuart. Thanks, my friend. Dicky, Terry, good news. Norman, what's the prop trading firm should I choose? I like Apex now, although I'm negotiating with another firm that also offers. I think take a look at them. Trader with two R's. I think that they may not compare quite as well. They have certain things with the futures. Go to Apex. They're the biggest. They've been around a long. I like them. That's the one that I tend to move people toward. But again, your decision is your own. I like Top Step too. And part of the parameters that I think are important are how long have they been in business? Are they increasing their payouts to successful traders? I want to see those to me show success in the system. Shows that there's a track that some people are running on and doing well, and it's growing. That's what I want. Whether it's an 80% payout or a 90% payout, I don't mind, even though Apex is a 90. That's important, and it's in the listing that for my final number of which is the best. But I've done a study on it. I used to offer that study. In fact, if you want it, just email me and I'll send you the study. But the idea is that Apex and Top Step won that study, basically because I get a lot of weight to have they been around and are they growing? Okay, so you'll see them popping up all the time. But what I like, if you're a stock trader, an option trader, they have actual trader. It's something trader with two R's. If you email me, I'll find it for you. But the idea is that they offer prop trading for stocks and for options, but it's not quite as sweet as with traders. There's certain parameters when I was taking a look at it. I'm looking at that. I may help them with some of their presentations and so on, but they're headed up by terrific guys, very smart floor traders and so on. So that's another one. But really, Apex I think is the one. I gave you email Norman now. There he is. Thank you, David. With a little immediacy, very similar. I'm leading the wealth charts platform with Apex. Very good experience so far. Yeah, wealth charts. Yeah, I don't know if they're pushing well. I think they're pushing wealth charts for their. I use Ninja, and they supply. In fact, the Apex gives you Ninja Trader and gives you the data feed. I have Rhythmic, but they have Tradeovate. And I got a guy that can set it up for you also. We charge $150 for the guy to set it up for you. But if you're in this program, I give it to you. So that's just kind of another thing. You can email me about that if you want. Because it can be a little, I'm like an anti-nerd, although I love the nerds and some of my best friends are nerds. But no offense, David. But
Oh,
um,
thanks. That was me, right?
yes, that was you. And but I would rather hire that out. And so I found a guy, and now I'm going to have him find you if you need him. I've made a deal out of him, where he goes into your computer um, and actually does it for you. And then you can ask him any questions you want about any of the platforms. He's very familiar with all of the platforms, especially Ninja. You can ask him, how do I do a chart? How do I move this around? I never get to do this. How do I put this up? You can ask him that if you want. So anyway, I got a guy. So admin at thedisciplintrader.com. If you're interested in seeing what the PDF looks like, just say I'm interested in the study group. Okay, that about wraps it up. I like the trailing stop. Okay. Um, I like my trailing stop. We'll have to compare trailing stops. But DKI, it's good to have a trailing stop. When you got a runner, again, with the notion that you don't want to give back that open trade equity, very important. So good move there, DK1. Um, and you don't like the trailing stop. Yeah, I don't use mechanical trailing stops. I'm a guy that would rather do it on my own. Okay. All right, everybody. That is about it. If there's no other questions, we will wrap it up. I'm going to go to my 60-second rule, which is if there's no questions in 60 seconds, we'll just say goodbye and we'll all have a nice day watching the play-ins today for football. So we've got about 45 seconds. Any other questions? I will take them. Really, again, I listen. This is Saturday. I appreciate your being here. Appreciate David encouraging you to be here. If you haven't seen some of, he's got a wealth of stuff. Almost. I think it's almost overwhelming to some people. So if you haven't really taken a look, um, at the trading research more deeply than you even have, you really want to do that. Okay. So thank you, Howard. Great to see you here. Appreciate the support. And you're an owner. You're an owner of a loaded gun, Howard. Can you tell somebody about it? Tell them something good or bad about it. Be honest. Okay, over and out. Thank you, Stuart. I'll just wait for one positive comment or a ruinous comment, whatever it is. Um, just say good or bad. Very good when combined with broken trendline entries. I see you combine stuff. That's the thing about loaded gun. It's a very simple trading plan that works on its own. A lot of people have favorite things that they'd like to employ, and we can take a look at that together. And again, I've written a lot of plans. We can put that together. So thank you, Howard. Very good. All right, everybody. Thank you for coming. And the 60-second rule has been applied and is now in effect. Thank you for coming, and happy trading to you. Stay disciplined, as I always say. And thank you, David, for having me.
All right. Yeah, thanks, Norman. Thanks for coming back today. And as I said at the start, this is being recorded and will be available on TimingResearch.com as soon as I can get it processed. So check that out and be sure to email Norman at admin@thedisciplinedtrader.com. All right. Thanks, everyone.
All right, be well.